Hi, future traders. Over the next 28 days, I'll guide you through the trading challenge. You'll learn how to think like a trader, one decision at one time. So basically, first, the question is, what is trading? So basically, trading is buying and selling of assets like stocks, currencies, or crypto. But really, it's about one thing, using the price movement to make a profit. So, as an example, let's flip a coin. And if it lands on tails, you win. And if it lands on heads, you lose. Okay, so it's tails. And why I showed you it, it's because you won this time. Now imagine the coin lands on heads 60% of the time. And that gives you just a 40% chance to win. Would you still play? That's a mindset shift. You rely on luck, you lose. The traders don't gamble. They look for affordable odds and manage risk. You lose charts, patterns, and tools to stack the probabilities in your favor. So basically, over the next 28 days, you learn how to read charts, spot setups, and build up your strategy. So most traders start by losing money before they learn. How much do you think you need to start trading? So basically, let's write a table. So basically, we have here 0, 100, 500, and 1000. And let's choose that a normal trader would like to start investing from $100. But to start trading, you don't really need money to learn, because you can earn money in virtual trading. And in just Olymp Trade, as an example, there is a demo account where you can learn and then deposit your money. So basically, it's our first lesson. Recap: trading is not gambling. Trading is about stacking probabilities. You don't need to risk real money to learn. Use the simulator at Olymp Trade. Next up, we will have right now the third core trading decisions every trader makes daily. Yes. Okay. Okay, let's learn about buy, sell, or hold is the most important decision that you will face in trading. So today's your first ride in the markets. You learn how to make simple decisions when to buy, when to sell, and when to hold. By the end, you'll see like how the decisions can lead to gains or losses. It may sound like very obvious. Buy when you believe the price will rise, sell to log the profit or limit loss, hold if you're uncertain or expect recovery. But in trading, timing defines the outcome. For example, let's draw a chart. Some Japanese candlesticks that rise up, as an example. And for example, you buy at $100. If the price jumps to 110, you gain 10% per share. But if it falls to 95, that's a $5 loss. Simple as that. Selling is not just like sell. Selling is your exit button to protect your account. Let's say you buy a 100% share. If the price spikes to 110, selling your locks your gain. If the price crashes to 90%, $90. Selling caps your loss before it gets worse. So basically, let's draw a chart like this of candles. So basically, we have here like this, and here's the sell button, and here's the our amounts. As simple as that. Okay. Besides buying and selling, there is a thing holding. Holding means waiting. Sometimes it's smart, like letting a winning trade run. It also might be risky, like watching profits disappear. You must learn one important thing. Never let your emotions trade. Never let your emotions trade. If you feel like panic is creeping in, step back and wait and don't fucking trade. Now you understand the basics. Let's practice on Microsoft chart right in front of you. So basically, I will go right now on Microsoft chart and we will practice some things. So, okay, down here right now it's $1,000. The higher this number, the longer you can keep trading. The next is live PL, profit and loss in real time. As price swings, this number jumps up and down. It's your instant scoreboard while the ride's in motion. The total PL shows the grand total of your trades. Every win and every loss is added up to give your overall result. So basically, let's type some freaking normal stuff. So as an example, Microsoft's at 414.28. And analysts say it will climb up. It will climb all the way to 431.26 as an example. Would you buy or sell? So basically, okay, let's expand it a little bit and let's draw a chart. So basically Microsoft here, here, here. It dropped one more time, rises, dropped, rises, and here's the line at $414. And the balance is total PL and live PL. So basically, in this situation, we need to buy it because it rises up. Okay, and like in 15 minutes, the price will hit $431. Your profit is $17, for example. You can hold, but higher can mean riskier, sell or wait. So basically, if it's already very high, like high as fuck, we need to fucking sell because it will drop. You cannot risk because it's very high. You need to sell. Okay, and for example, the same situation. It became high, and it dropped critically. In this situation, what we do? We just hold. You stay out while the others rushed in. That's a trader's discipline. Okay. Because the Microsoft kept falling dipping to 414.68 cents. For example, holding back saved you from a bad entry. Sometimes the smartest trade is no trade. So, as an example, great job. You made a $17 profit in under 3 minutes. This was a simplified scenario to show how a trade can move. Real trading can lead to different outcomes, sometimes up, sometimes down, and that's why understanding the basics matters. Okay, let's keep going. Let's keep going. Okay, what I can tell more. I think let's talk about trading VC investing. Yeah, it's a very, very crucial topic for us to learn right now. Okay, you will clear out all the thing. Okay, let's do 20 create a taxon, trading, VC, investing. So basically, many confuse trading with investing. Trading is a quick and active investing. It's patient and steady. By the end of this course, you will know the difference and why it matters. So let me show you how I think. So I'm about the long game, like planting an orchard. Let's draw a orchard and a tree, and waiting for trees to mature. I want a stable income in retirement, so I decided like to plant a apple orchard. It's not quick process, but once the trees mature, they'll what? Yes, provide fruit year after year with a little effort. So meanwhile, my wife Jane has different priorities. She needs money now and isn't willing to wait for years an orchard to grow. Instead, she plants flowers that bloom quickly. So she plants a flower in a pot. Let's do it a rose, something like that. And this grows long, but investment in an orchard will get you money if you wait a long time. This quick investment. So basically she needs money now and isn't willing to wait years for an orchard to grow. Instead, she plants flowers that bloom quickly and can be sold immediately. The farmer must wait years for the tree to mature, but once they do, they'll produce fruit every season with minimal effort. This represents investing. Patience leads to long-term steady returns. Okay, for example, let's draw some sticks. Imagine it'll be our Allah tree. It will be our Allah investment tree. So basically, it will start as a freaking little tree, then it'll grow more and fucking more. And this will be a fucking straight line to profit in many years, and very many years. But the flower grower makes money right away, within weeks of planting. But unlike the orchard, which produces apple year after year, the flower seller must constantly replant to keep earning. So basically, let's draw a fucking trend line. This chart shows the Jane's flower sales. Can you draw a line to see if sales going up or down? Yes, we will draw right now a fucking chart. So basically, she plants a tree. Good, she's taking profit. Then it fucking collapse because she is replanting it, so it fucking goes up, collapse up, collapse up, collapse. Fucking trader's fortune. Every day it collapses or fucking goes up. That's all. And this will be the line, as same as this, but it will fucking collapse and go up, fucking collapse and go up. Okay. Let's reset all the shit. And let's talk about high liquidity and fucking low liquidity. Picture this. It's Mother's Day. Demand spikes. Jane sells out her fucking flowers in hours. That's high liquidity. Sometimes something can be easily turned into cash. Traders depend on it to enter and exit positions quickly. Because you're not a fucking freak ass that will sit in front of your monitor whole day. Because you have a fucking life. For investors, particularly, liquidity affects portfolio design, your full collection of investments, stocks, bonds, real estate, and even cash. A good portfolio considers not just risk and return, but how easily you can access and relocate those assets. So, let's pause the video for a second. Market with high liquidity, let traders buy and sell quickly without big price changes. Is it fucking true or false? Oh shit. Is it true or false? Okay, it's true. Because when a market with high liquidity lets traders buy and sell quickly. High liquidity makes traders buy and sell quickly. Get it in your fucking mind. Okay, where the fuck did my music go? 1 second. Okay. There's liquidity and volatility. So, if you're not a stupid faggot, you're gonna understand that it's the opposite of liquidity. So, let's picture a fucking terrible day. It rains. There'll be a fewer customers and willing fucking flowers. That's volatility. Unpredictable market swings. Some days the flower market is blooming and profits are high. That's fucking what? High liquidity. High liquidity. The market is fucking booming up. Everybody is buying and you're fucking becoming a millionaire. But in other days, there are too many sellers or too many buyers, resulting in losses. So, for example, there's 80% of buyers and 30% of sellers. So these fucking motherfuckers causes the sells and the fucking ups every day. So, basically, one more thing. Liquidity. How quickly an asset can be bought or sold. I'll even fucking write it here. Liquidity how an asset can be bought or sold. Remember this. Volatility, how much and how fast prices can change. Remember this fucking simple information. It's very simple. Okay, great job if you remembered this. Now let's compare investing and trading. So basically, investing requires patience. The biggest returns may come years after years. The key, compounding when profits are just taken out. But reinvesting can generate even more gains. It's like planting new trees. With every apple you harvest, over time, your orchard grows faster and yields more. Second, investors experience daily stress. Short-time prices swings don't matter as much when the goal is long-term growth. So don't be a prick and don't do long investments. Investors understand that prices can go up or down in the short run, but they stay focused on the bigger picture, building wealth over years through steady growth and reinvesting returns. So basically, trading is like what we're talking about right now, like flower selling. Offers last profits, but it requires a constant effort. Timing matters. Catching the right moment to sell can mean the difference between profit and loss. Traders must stay alert and be quickly ready to act as conditions change quickly. So basically, trading comes with a higher risk. Trading comes with a higher risk and higher potential reward. Higher potential rewards. Some trades win big, others don't. Prices can move quickly and the window to act may be short. Analyze constantly and be ready to execute fast. Investing, VC trading. Investing. Let's do it. Investing is patience. Is key. Big returns may take many years. Trading requires constant market monitoring. Okay. For example, why sell flowers by the end of the day? Not all fucking florists, for example, sell the same way. Some sell out daily to avoid spoilage, others hold stock overnight hoping for better prices, but flowers don't stay fresh forever. Why might florists sell out? Okay, forget about florists. Why might a trader sell out their flowers before the day ends? Flowers will wilt quickly, for example, just like unsold stocks, loses value. Selling in a day is always more profitable. Customers only buy flowers in the morning. So the right answer to this question would be flowers wilt quickly, just like unsold stocks loses value. Bam. Okay, so exactly, selling before closing avoids risk. It's like everyday traders closing positions before the market shuts. Some take the risk, but it depends on their plan. So basically, stocks don't spoil like fucking flowers, but their prices can change suddenly. When the market is closed, this is called a price gap. For example, overnight news or earnings reports can cause a stock to open much higher or lower than it closed the day before. Some traders sell before the market closes to avoid this risk. Others are willing to hold through it depending on their strategy. So basically, that's why they're different trading styles. Yep. Let's talk about this too. So first trading styles will be day trading. Day trading means buying and selling on the same day. It requires full focus, speed, and precision. Okay, the second will be position trading. It's more like investing. You hold for months, watch trends, and act slowly. And third would be swing trading. Sits in the middle. You hold positions for days or weeks, trying to catch medium-term moves. So, yep, that's like all that we needed to, I think, talk about. But maybe okay, let's I'll show you some good platforms to start if you want. So basically, if you want to dive in deep trading already in the first month, TradingView, your gate is Forex. Go to USD, CAD, or USD GPI. So basically, I trade all the time on USD GPI. I have my chart open here. I have buy points and sell points, but don't trust them, please. Every time, because buy points and sell points can be very unpredictable. And you need to sell within minutes. But if you're a broadcast nigga and you don't have money to invest, go to what? You go to Olymp Trade. You open your demo account and these configs EMA3, EMA20. So basically, trading crosses EMA. Oh, okay. So basically, as everybody know, we have these two EMAs. This will be our EMA20. This will be our EMA2. So this is called the golden cross. The golden cross. When it crosses, what will happen? It will rise. Here, golden cross. Okay, for you, I think change the color of this EMA to red. Yeah, it will be more good for you. Or it doesn't really matter. It's like this and EMA this to this. Why the fuck my EMA? Oh yeah, here and here. Okay. Why the fuck it disappeared? Fuck. What the fuck? What the fuck is happening? Oh, shit. I'm just a little bit stupid. Okay. So look. What is the 30 seconds? Yes, 30 seconds. So look, this was the depth cross. The buy thing crossed the sell point and it go down. So you sell when it crosses, and when it goes up, this is the sell point. Okay, for example, I'll show you right now. Look, it crosses, it nearly crosses. Right now, we put duration 1 minute because we're not pricks. And here we open a sell point if it crosses this one. As an example, we'll put $1,000 at a demo account, and we just wait for it. It's falling down or it's rising up. But in this scenario, if it would cross this line here, we will sell. I think you got it. Nice and simple. If this line crosses this shit, you need to sell. If this line crosses this up, you need to buy. Very simple. Very simple. It's simple like that. Just make a demo account and try investing like this. Simple as hell. Very simple. Thank you.